Hello there, this is fairbinaryoptions.com, and like the name of this analysis suggests, I'm looking at a bullish Great Britain pound US dollar starting with next week. And of course you all know that next week we are having the Bank of England and the European Central Bank on Thursday as well. But I would say that both events are equally important. In terms of technical analysis, I would say that what we have here is a contracting triangle that actually is an irregular contracting triangle that goes like this: A, B, C, and D, and the E wave, and then broke higher. And of course, like any contracting triangle, it goes between the A and C, and B and D trend line, like this, and then broke higher. Now the same is here on the 4-hour chart. On the 4-hour chart, I would stay starting with these highs here. We have a contracting triangle, an irregular variation of a contracting triangle, and like showing you here, this one goes for this being wave A, and the B wave, and the C wave, and the D wave, and the E wave. Actually, there is a mistake. This one here should come and be here. So A, B, C, D, E, A, B, C, D, E, and there you go. We have an irregular variation of a contracting triangle. The A and C trend line should be this one here. The B and D trend line should be this one here, from here to here. And the triangle started here and of course ended here. So what about the move after this contracting triangle? Well, after this contracting triangle, I would say we have a clear impulsive move: 1, 2, 3, 4, 5. Then the first correction, the X wave, and then the second correction, A, B, C, D, E, or the first correction, and then A, B, C, the second correction, and then here the X wave, sorry, and then the second correction. What I'm trying to say is that I will look for this trend line here to be retested, and to be retested with so this trend line here to be retested, and to be retested, let's say, sooner rather than later, as many of market participants are looking for that to be a rising wedge, but it is not, because of this 5-way structure here. So whenever you have a 5-way structure, you're not looking at a rising wedge, because in a rising wedge, typically legs of the rising wedge are corrective, as in most of the cases we are talking about the terminal impulsive move. Not the case here in the terminal impulsive move. So I would say that our triangle here that ended as a second wave of a bigger degree, and maybe some other time we'll have the occasion to take a look at it as a second wave of a bigger degree, like this. And then what we are witnessing here, we are having a first wave, of course, of a lower degree, here at the end of the 5-way structure. Then the second wave that it ended around here, or maybe here, somewhere like this. But the bounce there from the lows into the upside should be the beginning of a third wave, and this beginning of a third wave can only show us price or some, let's say, aggressiveness to the upside, and I would say bears will have an unpleasant surprise. So in order to conclude this analysis, what I would like to do, starting with next Monday, is of course to gun for the upside, or to look for buying call options with end of week expiration date, trying to avoid the volatility into the Bank of England, the volatility into the ISM, non-manufacturing in the United States, the volatility into the ECB, because the ECB also is influencing the Great Britain pound based on the euro Great Britain pound flows. So buying call options with end of week expiration date is the, let's say, the thing that I'm interested in, and most likely the outcome for next week. So by the time Monday, markets are going to open on Monday, I'm looking to buy the call options with end of week expiration date for the Great Britain pound and the US dollar. Thank you very much for being here. This is fairbinaryoptions.com, and we just issued a recommendation to buy call options on the euro and Great Britain pound and the US dollar. And all these analyses are possible due to the help of our sponsor here, Lion Hive. Bye bye.